Good afternoon and welcome to the Sound Energy Plc Annual General Meeting. Throughout the recorded meeting, investors will be in listen-only mode. I'd now like to hand you over to Graham Lyon, Executive Chairman. Good afternoon to you, sir.
Thank you, Mark. Good afternoon, ladies and gentlemen. I would like to welcome you to the reconvened Annual General Meeting of the company. On the 13th of June 2024, with the approval of shareholders, the AGM was adjourned until today. Please be advised that the proxies submitted for the meeting of the 13th of June still stand, together with any changes or any additions made. So before commencing the proceedings, I would like to introduce myself and my colleagues. I'm Graham Lyon, the Executive Chairman of the company. To my right is Mohammed Sagiri, our Chief Operating Officer, and to my left, far left, Christian Vukovic, our Senior Independent Director, and on my immediate left, Amanda Bateman of Amber Secretaries, our Company Secretary. David Bluden is unable to attend today and sends his apologies, as does Simon Ashby-Rowe. So before we start the formal proceedings, I'd like to pass over to our Company Secretary to explain the procedures that we will follow for this Annual General Meeting.
Thank you, Graham. Good afternoon. Before Graham takes you through the formal business, I would like to advise you that the company is exercising authority contained in the company's Articles of Association to call for a poll to be taken on the resolutions to be put to the meeting. I will now detail the procedure we will follow for the AGM. After the resolutions have been proposed, there will be an opportunity for you to ask questions about each of the resolutions. If you have a question, please state your name, or if you are a proxy or a corporate representative, your name and the name of the shareholder you represent before asking your question. Once any questions about the resolutions have finished, you will be invited to vote by way of a poll on the resolutions put to the meeting. On a poll, each shareholder present in person by corporate representative or proxy has one vote for every share held. If you have already lodged a form of proxy, you do not have to vote again now unless you wish to change the way you originally voted, or unless you did not appoint the chairman as your proxy and the person you appointed as your proxy is not present. A separate poll card should be used for each separate holding, so if you are representing more than one holding, please ask for additional cards as necessary. You should indicate the number of shares to be voted in the appropriate box on the poll card. If you do not, all the shares registered in your name or in the name of the person you are representing will be included in the count. If two or more persons are jointly registered as shareholders, any one of them may vote either in person or by proxy. If more than one of the joint holders votes, then the vote of the joint holder whose name is the most senior on the order of names on the share register shall be counted. Please complete the poll card and sign where indicated. If you are here as a proxy or corporate representative for a shareholder, you should complete the details of the shareholder you represent and your full name. Poll cards were provided as you entered the room. Please remain in your seat while the poll is being conducted. Once voting has finished, completed poll cards should be handed to the representative from Link, who will act as the scrutineers. Link is our registrars who sat at the back of the room. Those votes validly cast at this meeting will be added to the proxy votes properly received in advance of the meeting, and the outcome of the poll will be announced via RNS. So as the quorum for the meeting is present, with 2 members in person or by proxy and entitled to vote, we are quorate, and therefore I'll pass back to Graham to go through the formal business.
Thanks, Amanda. So let's start the formal process of the meeting. The notice convening this meeting was sent to shareholders on the 14th of May, and I would propose, with your agreement, to take the notice of the meeting as read, and I will read out the short form of these resolutions. Thank you. I will now propose the resolutions to the meeting. Resolutions 1 to 6 are ordinary resolutions, and 7 and 8 are special resolutions. The first item on the agenda is resolution number 1, to receive the audited annual accounts for the financial year ended 31st December 2023, together with the director's report and the auditor's report on those accounts. This resolution is proposed as an ordinary resolution. Resolution 2 is appointment of Crowe UK LLP as auditor of the company. This resolution is proposed as an ordinary resolution. Resolution 3 is to authorise the directors to determine the remuneration of the auditor. This resolution is also proposed as an ordinary resolution. Resolution number 4 was to reappoint Simon Ashby-Rudd as a director of the company. However, as announced to the market, Simon will be standing down after this AGM. Therefore, this resolution no longer stands. We thank him for his service and support over the last year. Resolution 5 is to reappoint David Blueden as our director of the company in accordance with Articles 124, 125 of the Companies Act, Articles of Association, sorry. This resolution is proposed as an ordinary resolution. Resolution 6 is to authorise the directors of the company to allot shares in the company up to an aggregate nominal amount of £5,979,368.03, provided that this is only used to allot shares for cash on a basis that is pro rata with shareholders' existing holdings, as outlined in the notes to the notice, with a separate authority to allot shares up to an aggregate nominal amount of £11,958,736.07 in respect of shares being issued by way of a rights issue. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2025 or on the 30th of June 2025, whichever is the earlier. This resolution is proposed as an ordinary resolution. Resolution 7 is linked to Resolution 6 in that it also concerns the authority to allot shares of the company. Where it differs from Resolution 6 is that it is in particularly concerned with the situation where your directors propose to allot shares for cash on a non-preemptive basis. Your directors are seeking authority to disapply the preemption rights in respect for an aggregate nominal amount of £3,986,245.35. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2025 or on the 30th of June 2025, whichever is the earlier. Resolution 7 is a special resolution. Resolution number 8 gives authority to the directors to make market purchases of ordinary shares in the capital of the company up to 10% of the company's issued share capital as at the date of mailing the notice of meeting. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2025 or on the 30th of June 2025, whichever is the earlier. Resolution 8 is a special resolution. Now, before putting the resolutions to the meeting, are there any questions? Okay, there being no questions, I appoint Link Group, the company's registrar, as scrutineer to the meeting, and I will now put the resolutions to the vote. So if you could, please complete your poll card and the company secretary will come and collect them from you. So if there are no more poll cards to collect, I declare the poll closed. Ladies and gentlemen, that concludes the formal part of the business today of our annual general meeting. The outcome of the poll will be announced via our RNS very shortly. Thank you for attendance, and I now declare the meeting closed. What we'll do now is give us a couple of minutes. We'll just change a few people around, and then we'll have a presentation from the company and answer questions and answers. So, Gary and John, if you'd like to join me. So I hope people saw a few of the revolving slides behind me with our site activity. Okay, Mark.
Yes, sir.
We'll roll if that's okay.
Perfect. Floor is yours, sir.
Thank you. Well, following the adjourned AGM, it's now concluded. We asked everybody for any questions on the Investor Meet platform. We got lots, surprisingly, no doubt because we made an announcement the day after the adjournment of the AGM. So I'm fortunate to have Mohammed Sagiri here, our Chief Operating Officer, Gary Dempster on the far end, our Chief Financial Officer, and John Argent, our VP Geoscience, to help me answer some of the questions. I'm going to go through a presentation probably a little bit quicker than I would normally because there is a lot of question, or I want as much time for the questions and answer session as possible. And we've got some quite detailed questions, so hopefully people will bear with me. I think we all know the story of why we're doing our business. Morocco needs gas. We have the largest onshore position in Morocco. There's a compelling need for gas in Morocco. We have two projects that we are, one underway, under development, another one in the planning cycle, which we'd hope to get on to develop fairly soon. We have, I think, have now announced with the June the 14th announcement a strong, robust financing plan to get these things up and running. We also have a significant portfolio in the exploration front that we'd like to go to. I have our HSSE supervisor manager here, and he's ready to answer any questions on ESG as they come up. But bear in mind that we try and do everything safely, securely, with an environmentally friendly manner. Some of you may have seen this slide before, but I think the important fact to notice is that Morocco has imported its gas an increase of 400%. I think what essentially that means is the Algerian gas that was turned off has been supplemented by imported gas from Spain primarily, which is regasified, liquefied natural gas. So you can imagine that's quite expensive for the Moroccans. There is a big demand for energy, growing country, growing industry with a substantial growth rate, which I think a lot of European countries will be pleased to have. It has an advanced sustainable energy policy. It's been in place for several years, and we want to be part of that. The transition economy needs gas, and we're there to help provide that. The Tendrara development, without going into too great detail at the moment, you all know the story of our micro LNG phase 1 project, and that's been moving along. For those of you that follow us on LinkedIn or X, you'll see some pictures of activity that are happening, and we're planning to have all the kit on site by the end of the year, and then commissioned and LNG sales thereafter. And a few pictures for those who haven't seen the rolling slides. Plant construction. A lot of the activity on site is primarily around the tank construction, but the amine unit has arrived and other pieces of equipment are coming to site. Just recently, we had the Star Valley Rig 101 working on our two wells, T6 and 7. So T6 is ready for production now. It's got its production tree on. It's got its corrosion-resistant tubing in. T7 is waiting for a piece of kit on the surface, and we hope to have that one ready soon as well. Once we create our LNG, we need to transport it, and working with Africa Gas, our purchaser, we're also constructing the access road. And whilst it's mostly gravel and hardcore at the moment, there will be a blacktop being put on it as well. So you'll see that developing over the next few months. Phase 2 is the big one, and this is the pipeline development which we've committed to with the ministry. We are planning to sell gas through a gas sales agreement to the 2 power stations that will need our gas on the GME pipeline. And the key to get that project going is to take the final investment decision, and that needs several elements. The gas sales agreement. Now we have a gas sales agreement that we've been tweaking a little bit, and just recently there's a new CEO at ONEE, and we'll be finalising that gas sales agreement with ONEE very shortly. We have the need to do a little bit of an update on our front-end engineering and design. The plant's changed a little bit to match the sales volumes, but also over the last 3 years you've seen a massive swing in costs up and down. So we need to refresh the outturn costs for the project. Atijuafa Bank are our debt providers. They're there. They have given us a good term sheet, a good facility, and we're pleased to be working with them. So the missing portion for that was the equity component that everybody needs to bring to the table. And that's where on the 14th of June, we were able to announce the transaction, a binding sale and purchase agreement with Managem. In the end, the value to Sound is over $45 million. This dates back to just before we took the notice to proceed with the micro LNG project. What it does do is give net to Sound a $24.5 million funding for the phase 2 development. That's the equity portion. Bear in mind there's a big chunk of the debt portion. So if you gross that up, that means equity is over $100 million, $120 million, plus the $230 million of the Atijuafa Bank. We're talking $350 million. Currently, we expect that should be sufficient for the project, but let's get the FEED done. We have a first gas production payment of $1.5 million. That's a nice sweetener that Managem were kind enough to offer us. More importantly, though, it also brings with us 2 exploration wells. And I'm sure John will answer a few questions on the drilling. But it's the drilling of the 1 well on the Grand Tendrara license and 1 well on the Anawal license. And these will both be commitments that we're expected to drill for, on behalf of the ministry. So exciting that we've got a 2 well exploration program confirmed. Key for us in the short term will be closing this deal with Managem, and that will bring to Sound Energy around about $12 million of past costs, which is how much money that we would have spent at the 55% equity position, Sound Energy Morocco East, the company was selling. And then when we move forward in the exploration, another $1 million for the money we spent on exploration. So a considerable amount of back costs, so Sound will have some spare cash. Who are Managem, you might ask? For those of you that know Morocco well, they're a Morocco headquartered Pan-African mining company. They're in 7 countries across Africa, mostly in mines. Gold is one of their areas internationally. They're an integrated player. They employ 5,000 people. They have a good market cap, $2 and a bit billion. They are owned 82% by a particular fund called Al Mada, and so that's a large private Moroccan holding. So we think that these are a good strategic partner as well. We believe they can add a lot of value to unlocking Tendrara. Part of their vision for 2030, and I'm not here to talk on behalf of Managem, but they are transitioning in their own right. And they're moving into transition critical minerals, but they're also moving into energy, and they see the value of that. A big company, lots of people, big project engineering teams, etc. So we think an excellent company to partner with. A strong financial player, good metrics. If you deal with Managem, you know what you're going to get, and we're very pleased to have them as a partner. John, I'm sure, has shown this slide several times before, but it's just a reminder that there's still a lot of untapped potential if we can get the exploration game going again. And the three immediate wells that we've identified, 2 on Grand Tendrara and 1 exciting exploration well on Anawal. And I'll let John explain that because he's much better than that than me. So what are we doing? Our key activities. Clearly, we've got our day job. Mohammed's been pulling his hair out, getting this moving with our onshore construction and the micro-LNG project. Things are moving, things are happening, slower than we all wanted, but we're planning to get that all in place by the end of the year and hopefully get the critical path item, which is the LNG storage tank, available shortly after so that we can start selling gas. You know, a lot of that it's a little bit of a moving target, but we're working on that. Another important aspect as we build all these building blocks in Sound, as we've moved from a pure exploration company into a development and then hopefully a revenue generating company early next year, is getting projects over the ground, getting the funding together for those projects. And it's clear that we've had a lot of support from the business community in Morocco. With Attijou Alpha Bank, you know, the #1 bank, I think, in Morocco, is it? Or one of the top banks. One of the top banks in Morocco provided some debt funding, leading that consortium of banks. We have ONE, a state purchaser for the gas. We need to get the updated fee study and an engineering procurement and construction group, and all the approvals are pretty much in place. The key missing part for that jigsaw was the equity portion, and you know, we'll talk about this a little bit later on, but trying to raise $40–50 million for Sound is not easy at the equity level, and I'm sure shareholders wouldn't want to be diluted like that one way or the other. Exploration, I think we've got a partner now who's committed to developing exploration. It's very encouraging that they made it clear that they are not in this just to do one pipeline project. They've built pipelines before in their own businesses. They want to get involved in the exploration. What we need to do is also move TE4 at Grand Tendrara. So we'd like to get all 3 wells drilled. Strengthening the balance sheet, that's been important. You know, we did quite a lot of activity in 2023, and you know about that. And you know, I think the key for us for future is closing this deal with Managem and having a bit of cash in the bank. This is the standard slide. You'll see this pretty much everywhere, and we'll take any finance questions. There's some that have been brought up. We haven't forgotten ESG. We do work it. I am very pleased, and Mohammed should be proud of his team in Morocco, that when we had the well operations, and John was heavily involved in that, we had no safety incidents at all. Thank you, Sean. We had a good team, good crew. We had a couple of technical things we needed to deal with. They were dealt with properly. Bear in mind that people worked over the Eid as well, so it's a bit like if you're in the Western world working over Christmas. No loss in productivity, no loss in quality and safety. So pleased with that. Part of 2024 and our objectives is to engage even more with the local community and put in a social investment plan, and also the CO2 that we've got in our gas. We've found ways of capturing that and commercializing that, and we'll give more information on that. So that could add a little bit of value for us as well, but more importantly, it reduces our emissions. So where are we? I think you've seen what we've done with the company. We've tried to take it from a pure exploration company. It's not been easy, I have to say. We've had a few speed bumps, as they would say, in the road. We've overcome most of them. I think we're on the last few. We're definitely a strategic player in Morocco for the energy market in providing gas. That is part of that transition energy, that flexibility that's needed between the renewable energy and the still days and the dry days and the not windy days. We have a position onshore. We're competitive, and I think we can do things. We have a forward plan, what we want to do with the phase 2 development, and of course any other success on exploration will bring another add-on, another add-on, another add-on. I think we've now laid out the financial roadmap with Managem as our partner. So being a key player in Morocco, established in Morocco, up and running, revenue generating, we can then start looking at what we can do with Sound and expand the company in other directions. But I have to say, with our small team, we've been very focused on developing Tendrara and getting that underway. So that's where I would like to finish the questions, and I can move, the presentation. Now I can move to the questions, and please bear with me. We've got over, I think, 50 questions, some of which are a little bit redundant now because they were all telling me I was lazy, wasn't closing the other deal, the other opportunity. And but you can see now we were doing some other things and running plan B and running plan C at the same time. So what I'll do is I'll read the questions out. Forgive me if I paraphrase a few because some of them are long, and then I'll answer some. John, Gary, and Mohammed will answer others. So the first question, and there were a lot about why is it taking so long on Cal Valley, so we've parked that. The proposed deal with Cal Valley would have a massive giveaway anyway, reducing our 75% to just 35%. The deal with Managem seems at first sight much worse. This hasn't gone down well with shareholders and the share price. Please explain why the Cal Valley deal fell through and why a Managem deal will be better. Well, I think the answer to that is Cal Valley were taking far too long to close the deal. And because it was announced as a non-binding term sheet, others approached us. And so we were talking to several other companies. And at the same time, Cal Valley, because of a non-binding term sheet, continued to negotiate. And rather than closing a deal, and no, it's not that we didn't want to close a deal with them, they're a good group to partner with. But I think you'll find now with Managem, with the 2 exploration wells that we've got Managem to fund, and a much larger carry, it means we're more aligned, and it's a greater net asset value than the Cal Valley transaction would have done. So, and we also shouldn't forget the quality of having a partner like Managem de-risking the project. A local Moroccan player helping us develop local Moroccan gas. I think this is a cleaner and simpler transaction with the sale of Sound Energy Morocco East. Cal Valley would have been a large restructuring, needing a whole lot of government approvals, changing of contracts, etc. So even if we'd managed to finalise the same purchase agreement with Cal Valley, it might have taken another 6 months to close. Question here, it would appear that the tax issue, which took so much time and effort for Sound to resolve, could have been an attempt by certain factions in Morocco to weaken Sound's position. Now, does this deal with Managem restore Moroccan control? So I think we shouldn't look at it as weakening our position. I think it's more as an enabler to the business. 75% equity to try and put a $350 million project together whilst you're doing a micro LNG project was a tough order for Sound to do. And so this deal does bring significant value. It de-risks the project. The likelihood of this going ahead is far greater than it would have been even 6 months ago, or even if we'd closed with Cal Valley. What I would also say is we've got big upside in those 2 exploration licenses, and Managem are after chasing those down as well. So in parallel, we'll manage all. We do have 2 very large Moroccan shareholders, and I've since discussed this transaction with them. Of course, they're very interested, and they're convinced that this is a good deal for Sound. So what's good for them should be good for all shareholders. We're now a minority holder in Tendrara. Do we continue to have any say at all in what's going on in the concession? Does Managem have the same priorities as us as we do regarding drilling? Well, yes. This will be a new challenge for us. As opposed to finding the money to fund a 75% position, our challenge is now going to be working closely with our partners. Now, this is day-to-day business for us in the energy world. We joint venture all over the world with companies, and through structures like the association contract or the management committee meeting, ourselves, ONIM, the state participant, and manager will all have a say at the table. Of course, there are voting rights, but the way the association contract is that people have to be aligned to go forward. So yes, we still have an element of control. It's called operated by others, managing other companies. And I would say over the last few months, we have a very good relationship with management right to the top. And so far, they seem to be an excellent counterparty, a very professional, well-structured company. So we're pleased to have them, and I'm sure they're going to be very aligned with the way we go forward. Regarding the 2 exploration wells, yes, they're completely aligned. John is part of the transition plan to ensure that they fully understand what's needed and getting the operations up and running to try and get the exploration moving alongside it. Clearly, none of this will take place until the deal is closed. It can't happen before then, but that's our plan. Similar question, apart from Sidi Mokhtar, what assets of any value are still in our control? Ownership. Well, everything's still in our ownership. We've not got out of Morocco. So we do continue to operate Sidi Mokhtar, and we're talking to people about progressing that. But we've discussed this part in the past. You know, do shareholders want to be diluted at the PLC level? When you're a market cap of 20 million and you're trying to raise 40 million, I don't think the UK market will allow that. We'll fund it. But secondly, you know, at the asset level, you get more close to a net asset value than you do a share price value, which, if you look at our share price relative to our net asset value, they're not the same. Okay. So we really do believe, and the board approved this as opposed to other transactions that we could have signed, that this is a better deal than the alternatives. Are we now simply passengers waiting for management to start generating revenue? Gary, I think, can I ask you to look at this? I mean, you know, what, if any, further capex are we going to need? I mean, I've been talking a lot now, but it does come down to the best value in the project. So,
yeah, I mean, certainly we don't see ourselves as passengers. We've got a lot of regional knowledge that we'll look to share and use that knowledge we have to drive value, influence the operator, influence ONIM, influence other stakeholders in the joint venture and outside the joint venture going forward. So we see ourselves being fully involved in development of the assets, in developing our working interests going forward. We've obviously got rights, as Graham mentioned, under the petroleum agreements to vote on the various matters, so we'll be actively involved now and going forward. In terms of future capex, well, the structure of the transaction is that we are carried for phase 2 in terms of the forecasted equity component of that investment. So obviously that relieves that capex burden on the company and on shareholders. And then we've got 2 exciting exploration well carries as well, so we're fully carried for those 2 prospects as well. John will go into more details on those later on in the presentation. Thereafter, if there are further capex demands, then we'll obviously be required as a 20% participant in the concession to fund further capex beyond phase 1, beyond phase 2, and beyond the exploration carried on the other licenses as well. So we will be expected to fund future incremental capex thereafter, but that's actually quite a good problem to have, because that means we've got some exciting investments in front of us, so we shouldn't be scared of that. It's an opportunity for us.
Yeah, thanks. The next one, Gary, is one for you. Well, I'd like to pass to you anyway, if that's okay. Could you put an approximate estimated potential value on sales, 27.5% of NOL and the SBK wells if they were successful? Likewise, a value on 20% of phase 2.
Okay, all right. So hopefully you've seen the updated market research post announcement of the transaction with Managen. So that was announced earlier on this week. We've got the initiation coverage from our new broker, Zeus. So you can see that in the marketplace. We also had a flash note from SP Angel, our former broker as well. So they put some values on the asset, on the business. So you can see, for example, from the Zeus valuation, they've got an unrisked valuation of about 4 pence per share from the concession. So that gives you a sense as to the value that we see from development of both phase 1 and phase 2 going forward. 4 pence per share unrisked is clearly well above the current share price that we're seeing in the market. In terms of future earnings, we see around, from their forecast, around 18-19 million pounds of EBITDA on an annualized basis once we're through the investment phase. So there's some strong figures there that, obviously, with the enablement of the funding and progression of the projects through the carries, we look forward to delivering in the years that lie ahead of us. In terms of the exploration potential, John, again, will go into a bit more detail on that later on in the presentation, but there are quite significant numbers there. For example, on the M5 prospect on Anwal, the gross PV unrisked gas initially in place is around 940 BCF. So there's significant potential that we hope to look forward to trying to realise within the not too distant future through those 2 exploration carries that we have.
Okay, thanks. Another one for you, Gary, coming up. Can you clarify that management will carry the total costs for the SBK and Anwal drilling, and Sound won't be contributing? Presumably, ONHYM will be paying 25% of the cost too.
Yes, so the deal that we concluded with Managem is designed to be a full carry on each of those 2 prospects. So we've got a very robust cost estimate in place for SBK1 and for M5, and it's a full carry for Sound Energy's remaining equity interest in those 2 prospects. So we've got a 27.5% interest through our Energy Holdings. We're fully carried through those planned activities. In terms of ONHYM, they've never contributed to exploration costs. They're fully carried through the exploration phase, so that will continue to be the case. So clearly, Managem will pick up all of the costs associated with drilling those 2 prospects.
Another one for you, Gary, coming up, and it's about the detail of the deal with Managem. As you can imagine, the headline numbers are fine, but there's a lot of value that we try to create for shareholders inside the deal. So will Managem be taking over the agreement and payment of the Schlumberger contribution, or will this be a future cost to Sound?
Yeah, they will indeed. So for those of you that may remember that transaction we did with Schlumberger back in 2021, we acquired their interest in the concession and the exploration permits. In return for doing that, we entered into a net profit interest agreement with them. Through that net profit interest agreement, we were obliged to pay them between 8 and 11% of future net profits from the concession. With this transaction, we have agreed with Managem that burden for paying all of that passes across to Managem. So it's another additional value component that maybe wasn't seen in the overall description of the deal that we announced 2 weeks ago.
Good, thank you. An easy one for me now. What happened to Calvally? The simple answer is you must ask them. They've got a professional leadership team, and I'm sure they're looking at other opportunities. A more little technical one, somebody spotted in the Managem announcement that they talk about delivering 100 million cubic meters of LNG each year. It should be 100 million cubic meters of gas in liquefied form. Wasn't you asking that, was it? So yes, it was a mistake. Managem have got, we sell roughly 10 million cubic foot a day in old money in the form of liquefied natural gas, and that's 0.1 of a billion cubic meters a year as in the gaseous phase. So yes, it is. The gaseous phase is 600 times bigger than liquid phase. I'm going to now, we've highlighted that John's here to talk a little bit about, or answer the questions on the exploration. So John, if you get yourself ready. If T4, I mean, I know you're prepared. Is T4 successful? It will transform the prospect of progressing phase 2. I don't think it will, but anyway. As T4 has already proven the presence of gas, a horizontal drill would greatly increase the chance of success and would in any case be necessary for a production well. So why not do this in the first stage?
Okay, that's great. Thank you very much. Look, I guess the first question to ask me, and some shareholders in the room would want to ask me is, why am I here? Okay, at this table, and I want to make it clear that I'm here at this table because I fundamentally agree with the petroleum, the gas potential, the significant gas potential of this basin. Okay, so for those of us who work in this industry, this very exciting industry, we know that opening up a new basin, okay, such as this, it requires tenacity and persistence, doesn't it, Christian? Okay, and yes, given those risks, it also requires a little bit of luck, okay, as well on top of that. So you only have to look at what once were frontier basins around the planet, and some very recent ones that have opened up that demonstrate that. And you can look at some examples of Namibia, Guyana, Mozambique. You can have a look at those in the news, okay? Those basins, okay, had several failed attempts before they were ultimately opened up to be incredibly successful, okay? And that's why I'm here. This basin, it's very large, 24,000 square kilometers that we've licensed. There's only a dozen wells drilled to date, okay, in this basin. So it's very much underexplored, but it has gas resources, okay? Those gas resources, they're proven by the T5 Horse gas discovery that we're developing at the moment. SBK-1, which is also another discovery, which we'll talk about in a moment, and all the other wells drilled in this basin have all encountered either gas or oil shows. Okay, so there's a petroleum system present in this basin. So the next question, obviously, is just how prolific, okay, could this basin be? Okay, it's a large basin. And that's the question that I want the opportunity to answer, and that is why I'm here. And the Managem deal, okay, it's a very important key deal for this company, gives us that opportunity to answer that question. Okay. So, Mark, could you put on slide 24, please, up on the screen? That would be great. So, obviously, more drilling is needed to unlock this basin. There are numerous undrilled exploration targets within this basin itself. And this cross-section through the basin here, you can see the T5 Horse in the middle here. Okay, you've seen this, some of you have seen this already on our website before, that's sitting there. And we've also got the M5 prospect in here, very large prospect, which I'll be talking about a little bit later. So this management deal, it delivers the opportunity for further drilling in this basin, and that's why I'm very excited about this opportunity for us as a company, but also obviously for our shareholders as well. Now, that being said, I will answer the question on T4.
Don't forget, we've got lunch together.
That's right, we have lunch together. So first of all, T4, phase 2, that stands, on its own with the existing resources at the T5 Horse, okay? And we maintain the T4 Horse, which is just to the south of the T5 Horse. And Mark, if you put up slide 27, please, on there, people would have seen this slide before. We maintain this as a high-graded opportunity, and we'll continue to hold this opportunity within the portfolio, okay? So if successful, it could potentially add, in the upside case, around about 400 BCF, I think, going to PME, I think PME is 140 BCF of gas in place, unrisked and basis on there. And whilst the T4 well, that's proven gas presence in the structure, it didn't flow on test. So the fundamental question for this well is, or for this prospect, is the effective reservoir at the crest of the well, just as we have the T5 Horse, where we can flow gas. So why not drill a horizontal well to answer this, okay, and help improve the chance of doing that? Well, we estimate, or certainly our drilling team do, that a horizontal well is going to be twice or more than twice the cost of a vertical well, okay? But what's the advantage of drilling a horizontal well? Well, one of the advantages is that you increase reservoir exposure, therefore you increase gas deliverability, okay, from that. But we already have this information because we drilled T6 as a vertical well, and then we drilled T7 as a horizontal well. We tested those wells before they were stimulated or fracked, and after they were fracked as well. So we've got a lot of data from those well tests on understanding the deliverability of this reservoir. So we know that if we flow test a vertical well if we drill a horizontal well in the same type of reservoir, it should have approximately 4 times the deliverability. We know that from the drilling we've done on the T5 Horst. So I don't believe at this point in time it's worth effectively doubling the cost of your exploration well to obtain information that we already have to understand this reservoir. But a logical step would be that we could design a vertical exploration well. We could design that well in a way that we could repurpose it and kick off a horizontal well from that and turn that exploration well into a producer and lower the cost of putting a producing well into that structure. Okay. A long answer, but hopefully that answers that. Thank you.
Another one on the drilling, exploration drilling. SBK has proven gas. How much longer do we hold the license, and what has been done to secure it? And will we be passing 53% of our share in this license to Cal Valley? The answer is no, not to Cal Valley for sure, but go on.
No, okay, so we'll talk about, so Mark, if you put on slide 26 and that'll show SBK. Okay, and some of you would have seen this slide before. They're all available on our website. We'll post these slides up on the website. So SBK flowed gas to surface when it was drilled by the previous operator in the year 2000.
So Mark, can you...
It's slide number 26.
Put 26 on? Okay.
And that well, SBK1, that well's been plugged and abandoned by the previous operator some time ago, so the well can't be reused. So to make it clear, we'll be drilling a new well into this structure. Okay, it's the same reservoir we're targeting, the Taggy reservoir up on the T5 Horst. Now, interestingly, SBK1, it flowed at gas at a peak rate of about 4.4 million scuffs a day. It declined to about 2.5 million scuffs a day, and they saw pressure depletion, and that was consistent with it being drilled in a small compartment. And what we've seen on the seismic, the new seismic that we acquired, but also reprocessed as well, which we have up on the screen here, is the well was drilled in a small compartment, very close to a fault in a suboptimal location on an overall larger structure. So what we would like to drill is drill the larger compartment you can see on here to the left, and hopefully we can get that to flow and find some thicker reservoir on the crest of the structure. Okay. It's worth noting, okay, that T6, same type of vertical well, that flowed at less than 5 million scuffs a day with no fracking, and 17 million scuffs a day with a frack, okay, in that well successfully. The previous operator didn't frack, okay, SBK1. So the prospect itself, it's entirely held under the Grand Tendrara exploration permits, and that agreement ends in 2026. That's right, isn't it? Grand Tendrara. So we hold that up until then, okay, in the second phase. Under the deal, as Gary said, management will carry us for the cost of drilling this well, and in return for that, they earn the 47.5% interest, and that leaves us with 27.5% interest on there. Okay.
Good. In the management deal, no mention has been made of drilling T4, or no funding mentioned. And one of the questions that's come online today is why has T4 not been funded? Yeah, this was one of our 3 priority wells. So what's your view on that?
It is, but that opens up the well that I'm most excited about in this basin. So we go, Mark, to slide 25, please. And that is the well on structure M5 on Anawal. And this is the well that I really want to drill in this basin, okay? And why is that? Because it's potentially the largest undrilled structure at Taggy level within the basin, potentially larger than the T5 Horst. It's located in an area where the new seismic data that we have indicates that the Triassic reservoir is actually very thick, okay, and it could be up to 400 meters in thickness. And at the T5 Horst, it's about 100 meters in thickness. Okay, so we can see on the seismic at the top and the base of the reservoir, we can interpret that, and we can see it's in excess of 400 meters, so it could have a very thick reservoir in there. Very thick reservoir could mean that the reservoir is quite different in this area of the basin as well. So we could encounter a better quality reservoir in here as well, so something different. That's why I think that this is, an extremely exciting exploration well to drill in the basin. It could unlock some really significant volumes. Okay, and the upside, up to 1.7 TCF. Gary's mentioned, was it 940 BCF, something in that region in the mid case in there. But drilling this well, if it was to be successful, if it was to find something different on this reservoir, potentially larger, it could be a real game changer for this basin. And that's why I'm genuinely excited to drill this well and manage M70s as well. Okay, again, manage carry the cost of this well, which is great. Okay, and it fulfills the commitment on the losses.
So I think that was also part of it, is that we got 2 wells with Managem, and that fulfills both commitments that we've got. One commitment on Grand Tendrara well on the permit, and one on the Anawal permit. It's not that we don't want to drill TE4. I think we'll optimise it, and we'll try and get that well drilled as well. Now, if I can move over to more on some of the operational questions. We have a question here. Can Ital Fluid, and Mohammed, I think if you can help me answer these, can Ital Fluid be relied on to deliver before the year's end? Other than LNG storage tank from manufacturing Spain, we've not seen any evidence of any piece of equipment arriving on site. When can we expect to see Ital Fluid constructing on site?
Thank you, Graham. On this, we need, let's say, to explain that, or to say again, that the main problem now is manufacturing all the piece of equipment. So Ital Fluid are dealing, let's say, with several manufacturers located all around the world. So the manufacturing is ongoing. Our main challenge is working, let's say, with Ital Fluid in order to get all the local approvals before importing those pieces of equipment from Morocco. So we are working on that. We had this week a technical session all together. When I say all together, Africa Gas, Ital Fluid, and us to discuss the LNG loading systems and the interfaces between Africa Gas equipment and the Ital Fluid equipment. We had the same kind of session, let's say, a few weeks ago between the upstream system, the gas gathering systems, and the micro LNG plant. We need to make sure that all the systems, they are going to work all together in an efficient manner, in a safe manner, before bringing them to site. Because as soon as they are in site, we are in a desertic area. It will be in a very difficult position if things are not working well. So the intention, and I can ensure that all of the 3 partners, is to deliver as quick as possible, let's say, this plant, and to start producing LNG. We are all investing money in this project. So I just want to add that some equipment, they are already coming to site. And I invite you, let's say, to follow us on X to see all recent pictures and the picture that we will share with you in the next coming weeks and months.
Okay, thanks. Yeah, so you can follow us on X, or you can follow us on LinkedIn, and we try and put operational pictures up there from time to time when something has happened. The next question regarding the critical path, I suppose, the micro LNG plant, is there a new updated completion date for the inner tank, or an alternative temporary option so that we might bring forward the first LNG sales?
No, on the inner tank, there is no update at present. We are focusing our effort on the outer tank, and the outer tank wall needs to be complete to a certain height. And it's really presently linked, let's say, to the weather. We had, let's say, a lot of difficulty during the past months, let's say, with a lot of bad weather. And we hope that with the summer, let's say, we will have a better progress. About the inner tank, before, let's say, starting the work for inner tank, we need, let's say, to put the base, and we are working now on that. So foam glass is currently being put in place, and as soon as it's done, let's say, we'll be in position to start, let's say, the work on the inner tank.
So the insulation's going on the concrete floor, and then the inner tank goes on top of that. Mohammed, can we clarify, is it Sound or Managem running the micro LNG and Tendrara production? And who's responsible for getting phase 2 off the ground?
the entity responsible, let's say, to manage the work is the operator, and obviously the operator is Sound Energy Morocco East. As soon as management is going to take over this company, they are going to be in charge, and they will be responsible to staff, let's say, the team alongside of the Sound Energy current staff.
Good. So essentially, the operator doesn't change. It's Sound Energy Morocco East, but the control is the management infrastructure behind it, and our employees in Sound Energy Morocco East will transfer across to management. We'll move to some finance questions. Again, Gary, if you can. The company coffers are virtually empty. Please explain where the cash is coming from.
Yeah. So it's a good question. So the short answer is that we've announced through the managing deal a significant inflow of cash in the very near term. We're hoping to conclude the agreement within a 3-month period. We're already 2 weeks into that. Once we've done that, there's an inflow of back costs, $13 million we expect into the company at that juncture. So that's the near-term objective we have in place. We're making good progress in satisfying those CPs, so that will bring cash into the company. With that cash, when it comes through the door, that provides us with ample funds to get us through to first revenues from phase 1.
Good, thank you. This question is not exactly right, but I think you get the gist of it. LNG production will be well over a year behind the anticipated date. That's not quite true, but are there any penalty agreements with Italfluid for this delay? It would seem reasonable to delay their very substantial daily repayments once things are up and running for a comparable period. And this might allow you to use the money for other funds, such as drilling TE4.
Yes, there are penalty clauses within the Italfluid contract for them not having the plant available on the contractual start date, so we can apply those penalties. What we've been doing over the last few months is we've been trying to align the various agreements that we have in place, and that's essentially the Italfluid's contract and the Africa GSA to ensure that we merge all the contractual delivery obligations together to minimise any contractual exposure that the company may have, and obviously to minimise the leakage of revenue as well associated with the contract we have in place with Italfluid as well. So we're looking to optimise the two agreements, and if we choose to do so, we can obviously apply penalties to Italfluid for any late delivery.
Thanks. I'll lump a couple of questions together, but essentially it's talking about the debts we have that we've incurred through Africa loans and also the current Eurobond that we have. So you say you've de-risked Sound with Managem, but we've heard nothing about the bond repayment, which is due probably before sufficient revenues generated, and phase 1 or before phase 2 even. How's the bond repayments going to be managed?
So the bond repayment obligation is at the end of 2027. By then we will have revenue from phase 1, because that will have been started well before we get to that juncture. We also, with a fair wind, will have sanctioned, progressed and developed phase 2. So potentially we've got revenues as well from the phase 2 development. And remember that the phase 2 revenues are substantially greater than the phase 1 development that's ongoing at the current time. So there's a plan in place to bring in phase 1 revenues. Mapping on top of that, phase 2 revenues brings in significant cash flow to the company, which enables us to meet our debt obligations in terms of the Eurobond. The other thing that I would say is that with the Managem deal that we've agreed and getting near to taking FID on the phase 1 project, that creates conditions for us to look at the potential to refinance the bond that we have in place as well, because obviously we've got a more investable proposition in the marketplace as well. So that's something that we will explore over the coming months as well. So there's an opportunity, as I'm sure most of you are aware, to redeem the bond at a 30% discount to face value before the end of this year. So we've got opportunities now that we're more advanced in the investment proposition of the company as a whole to potentially refinance that corporate bond as well. But if we don't have success in doing that, then we do have plans in place to meet the debt obligations as they fall due.
Thank you. I think Gary, you've just advanced to the next one, which is when you just see us paying off some of this debt. There's a question here about could dividend be possible? Well, clearly, the board will always consider dividends when there's sufficient free cash, but we've got a lot of work to go. So I think generally small cap AIM companies aren't paying dividends. They reinvest the money and hope it shows a far better return in the share price. Okay, I've got a couple of questions about the same issue. The current share price is abysmal. Long-term shareholders deserve better. Yeah. What steps are being taken to improve the share price? Why has no board member made any recent share prices? Can't you at least infer a dividend payment? No. What is the incentive to buy any Sound shares? Well, look, we agree that I think if you read the market research from our broker Zeus and also SP Angel recently, we're trading well below the net asset value per share. So we see that there's value that we can create. I think the more certainty closing the Managem deal will help. The more certainty we have about revenue, getting to a position where we are with first gas sales from microenergy will help. But I think don't underestimate what Gary said earlier about the quality of our partner. I think recognizing that we have a very strong, well-known international partner has given the whole project at Tendra a lot more credibility. So we see what that can bring. I think with 2 exploration wells, that's exciting. So these are all good things. It's the same old question about directors buying shares, etc. Trust me, we know a hell of a lot of stuff, and the last thing I want to do is get done for insider trading. So we're always virtually in a closed period. So it's very difficult for board members to trade. Gary, myself, John, Christian, we all own shares and not being able to trade at all. So we're in the same position. But I think the incentive to buy shares in Sound is that the company's now got a strong local partner lined up. Very important local partner. I can't underemphasize just how credible that local partner is. That, I think, will unlock a few other opportunities for us in Morocco. We have 2 exploration wells. John's told you how excited he is about the M5 well. We know it's a risky well, but it could be a nice success. We have, and you've heard from Gary, substantial back costs that are going to come in that are quite material to Sound, which will take us well into our revenue generating phase, and we would hope to be having good a revenue stream in 2025. I think don't underestimate also that we have a very strong supportive government, and part of Managem's board structure is such that they have on the board as well. So this is all friends working together to develop for the good of Morocco this gas. Morocco needs the gas. We have the largest onshore position. We have partnered with very strong Moroccan partner. We are partnered with the state, with ONHYM, and we are going to get funded with a strong Moroccan bank. So I think bringing Managem to the table is that final missing piece from the jigsaw. We have been, let's say, doing our investor relations now for the last 3-4 weeks since the 2-3 weeks since the Managem announcement. I am disappointed with a peak and a fall. There are more trades going on, and a comment from one one online, shouldn't we consolidate the shares to stop the day traders? Another comment, why are institutional investors not buying sound shares? We have two strong Moroccan shareholders. We don't have institutions. For many, many years, this has been a retail stock. So we will have a look at what we do with the company once we close this management deal, how we can then move forward, growing sound through the production activities, the development activities, and the exciting exploration activities we're going to be doing in Morocco, but also maybe looking a little bit further afield at other opportunities for the company to widen its horizon. We have kept you all for quite a long time. I don't have any other questions on the online session, I think, that I haven't answered. So can I hand over to you to wrap up? Unless, of course, sorry, there's any questions. The people in the room, if you've got any questions, please, shout them out because it's a bit quiet. Otherwise, I'm happy to have a cup of tea with you afterwards. Mark, can I pass over to you, please? Oh, sorry, yeah.
What's happening with Sidi Mokhtar?
Sidi Mokhtar, John.
Yep, so Sidi Mokhtar is a license that we hold under Sound Energy Morocco South Limited. It is at an earlier exploration stage in the E&P cycle than assets in eastern Morocco. So it requires a seismic survey, okay, to mature up what we have some very promising leads and prospects, but to get those drilled, we need some additional seismic to do that. We're continuing to look for a partner to farm it down, okay, to fund that survey. We are talking to multiple parties still, I can assure you of that. So our plan is to get on and get that seismic done once we have a partner on board who can fund that survey.
Presumably the license is time limited, so how much time have we got?
So we have an obligation to complete that survey by October this year, but we are talking to the government, aren't we, Mohammed? And we have done constantly about how to align ourselves with on in the regulator, etc., to get that survey done. Okay.
Any other questions in the room?
Sorry,
Yes,
to do with the survey, do we have the funds to do it?
Sorry,
The survey in Sidi Mokhtar.
Oh, the Sidi Mokhtar survey. So as I say, we're looking for a farming partner, okay, to fund that survey. That's how that's our intention to fund that survey, isn't it, Gary?
Yeah,
It's
quite clear. No, we don't have the funds to fund the seismic. It's quite a substantial undertaking. That's why we've been looking for some time. That's why we're still looking and we're in discussions with a number of parties to look to farm out for carry.
Yeah, I mean, Salim, don't forget we're 100% to pay for this one. All right, we don't have any partner in there at the moment, so.
Is management,
Manager.
are they not interested in Sidi?
I think I sort of half answered that question earlier on to say they're very interested in growing their business in Morocco and through exploration. The current deal structure is all about Tendrara, but I'm sure we'll have a good conversation with them and try and encourage them, as well as. But John's been talking to other international companies who want to get into Morocco. I mean, exploration is always difficult in the East, even in the good days to get money for, and in a sort of unproven area, it's more and more difficult. But yeah, we'll talk to them, don't worry.
So I've got another one.
Sorry.
In terms of the exploration wells, which one do you want to start first, M5 or the SCB? And when would that be?
Well, let's just talk about the rig.
Talk about that, yeah, because I've been talking about the rig situation at the moment. So at the moment, you see we've been using the Star Valley 101 rig, which is a rig currently available in country. We've used that for the workovers to replace the tubing on T6 and T7. That's a lightweight super single rig. Okay, so it can only drill to a certain depth. Our drillers in Star Valley, we've been talking to them. We're confident that rig can drill to test M5 and TE4. So we could use that rig to do that. That's a rig available in country, and it's an active rig. So that's one way to accelerate the potential drilling of those targets by using that rig. Good news is obviously to do the workover, we need to get a 10K BOP underneath that rig. It's a smaller rig. We've got a blowout preventer, a BOP that's able to do that. It's a key piece of equipment to drill these pre-salt wells. SBK1, okay, that's a deeper well, okay, much deeper well that needs to be drilled. 101, the Star Valley rig, unfortunately can't reach those depths, so we need to reactivate the Deutag rig, which is currently stacked at T10, or we could look at options to bring in another rig for that one, so it might be in a slightly longer time frame to get that one drilled. Okay.
But don't get me wrong, I think we would like to drill all 3 wells.
Absolutely.
Now we've got funding for 2. We need to get this deal over the line with management and convince them that, you know, T4 as well would be a good idea.
And as soon as the deal's signed, you're gonna start drilling it. You're gonna start.
I think so. I mean, you know, they're getting up to speed, and you know, we have a transition.
Yeah, I mean, I wouldn't say as soon as the deal's signed. I mean, we have signed a deal.
Oh yeah, it needs planning. Don't forget.
And then it becomes unconditional. Hopefully within the next 3 months. I think it will be then that they start drilling, because they'll need some time to get their feet under the table and get their own engineers involved in identifying the key aspects of that opportunity. But they are ready, because we've done a lot of the advanced planning for the 2 wells. So we're hoping it won't be too long before we get
I mean, they've been very clear from us, and I'm down in Morocco next week with them, and Gary's managing a sort of a transition process. Well, they've been very clear, and they do quite a lot of M&A activity. So the best M&A activity is when, you know, there's a seamless transition. The last thing you want is a hot potato chucked over the wall and everything stops, and it takes them 6 months to get up to speed. So we're putting a transition plan together with them to make sure, so all the information that we're ready. I mean, the bit that was missing with us is the money, right? And they bring the money. So we've got a plan. We need to explain it to them, get them comfortable, and then try and encourage them, as Gary's correct. Nothing can get done until all the licenses are in place in the right way, and the deal closes.
To add to that, let's say the main thing, let's say, for drilling is to have a lot of wells to be drilled in a campaign, in a row. The deal that we signed with management is key, because we are now going, let's say, to drill, let's say, development wells. When you have development wells, you have teams on site. They are more, they have more and more experience, and they lower, let's say, the non-productive time. That means well, they're going to be cheaper. And especially, let's say, when you drill exploration well, you don't know, let's say, what you are going to get. It's exploration. So better to have a team who has already all, let's say, the processes related to drilling in place, and know, let's say, the environment before, let's say, to drill those kind of wells.
Thanks. Okay, gentlemen, ladies, thank you very much. Mark, I think if I can pass over to you, that will conclude our business today.
Perfect. Thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected? Provide your feedback, and all the management team can better understand your views and expectations. On behalf of the management team of Sound Energy Plc, we'd like to thank you for attending today's annual general meeting and presentation, and good afternoon to you all.
Thank you. Thanks very much.